What are the key takeaways?
Well, of course, these are two of the companies in the BAT triumvirate, and they are key players globally. You know, for years, you had Alibaba as the leader in e-commerce in China, and you had Tencent, reigning supreme in gaming and social media. However, their businesses, as they're expanding their user bases, are starting to mesh, and they're crisscrossing into cloud computing, AI, and many other areas, including fintech. So these two companies are bitter rivals now in many spaces. And these numbers were very interesting, given the backdrop, of course, of the global trade war between China and the United States, consumer spending trends, and the like. So let's break it down. For the most part, the bottom line for both companies, net income, were good. However, there are some revenue concerns at Tencent. Let's look at Alibaba first. Sales topping estimates in the quarter to March rose to $13.6 billion, about nearly 2% above the estimates. Also adjusted earnings per share of 8.57 yuan. We were expecting about 6.5, so EPS was well above expectations. And the key thing here is their expectations for this current fiscal year, 2019 to 2020, they expect sales to jump at least 33%. And what they've really done domestically, they've overhauled their traditional search to include shopping recommendations based on user preferences, and that boasts their ability to target advertising to merchants on Taobao. So the bottom line is core e-commerce revenue rose 54%, Paul. Customer management revenue rose 31%. Cloud unit soared 76%. So overall, a very good set of numbers for Alibaba.
Yeah, Alibaba has been doing pretty well, right? Steve, if you take a look at this GTV chart on the Bloomberg and you look at revenue compared to Tencent, Tencent has really been trailing Alibaba. Tencent, of course, a bar in blue. And this time around, they really didn't do that well.
Yeah, 2019 was a bit of a blip for Tencent. They had the big drag because of the government moratoriums on new game issuances, and that really is their main profit driver, gaming. They're in social media, of course. Their WeChat platform grew 6.9%. They're now 1.112 billion, huge user base. But gaming is the key profit driver, and they had that moratorium, so that kind of knocked things down. That moratorium, the government is now green-lighting new game issuances, so that offers a little bit of a silver lining for Tencent. But net income was better than expected, a 17% rise. However, a lot of that is one-off, a $1.5 billion, gain from their investments in overseas gaming companies and also finance. So that helped. However, many investors really zeroing in on the disappointing 16% rise in revenue, which was the slowest pace on record. 16%, not bad, but for Tencent, that's been blowing revenue numbers out of the water for years, that was the slowest pace on record. However, Bloomberg Intelligence's analyst Wei Ling says there was an 11% sequential rise in mobile game sales, and that bodes well for the sustained recovery of the business over 2019.